Let's give you the markets update now. And they closed in the red yesterday, weighed down by losses in retail and platinum mining stocks. Meanwhile, the rand weakening against the US dollar. Let's speak now to Chief Investment Officer and founder at Makwe Fund Managers, Makwe Masilela. Good morning to you, sir. Thank you for your time. Let's begin with your quick sense of how things are shaping up at the JSE and include in that response how the rand is faring.
You know, after closing in the red yesterday, we also opened in the red this morning because of this whole thing about the risk aversion and all because of this escalating tension in the Middle East. And also now it's happening at the time when bond yields are going up. As they go up, they put pressure on stocks. And so far, we've seen even the company earnings coming out of the US have not been that great. So people are moving away from risk and people are better off getting free money that is buying the US treasuries, which is risk-free and getting a better yield. Hence, we see stocks struggling. And the rand, unfortunately, with the expectations that the US dollar or the US interest rates will continue to be higher for longer and yields are going up, that's positive for the US dollar and it works against the likes of the rand.
Let's talk commodities. Gold soaring amid the Middle East unrest, and then you have the oil declining as OPEC dismisses Iran's Israel embargo push. Let's talk about whether or not is there a possibility to quantify the real impact of this unrest in the Middle East.
There is, starting with oil itself. Number one, should it be proven that the likes of Iran are involved, then definitely the likes of the US will strictly impose those or implement those sanctions that they have on Iran. And here Iran is responsible for almost 1% of the global oil production. And Iran can easily retaliate by trying to make things difficult and try to block the Strait of Hormuz. There you've got anything between 15 to 20% of the shipments going through there. So that will be very devastating. And yes, we've seen that they were not allowed by OPEC itself to have an oil embargo on Israel. And Israel per day, they're importing plus minus 250,000 barrels. So they're not a significant player. And at the same time, we've got Venezuela, which is now gradually coming back into the market, meaning it's going to help with supply. Gold itself, it's seen as a conventional, protection when it comes to geopolitical tensions, and it's more of a safe haven more than anything. And now what you see is that people run to gold, trying to protect whatever they have. But now the problem here is we don't see gold going much higher because we are talking about gold in a situation or in a period where we have interest rates which are high, and we know that high interest rates increases the opportunity cost of holding gold itself. But still gold is getting a lift from those geopolitical tensions, as we know that gold itself is a non-yielding billion.
Let's talk company news, and here's a name that many of us would have forgotten by now, Nokia. This company says it plans to cut up to 14,000 jobs as part of a new cost-saving plan after the third quarter sales dropping by a whopping 20% due to slowing sales. Help us understand, one, these developments, and also, secondly, the countries that will likely be affected here.
If you look into Nokia, the guys are saying 2026, they want to be having a saving of anything between 800 million to 1.2 billion euros. And now for them to be able to do that, they have to be more of a leaner company more than anything. The guys are looking into cutting almost 14,000 jobs. Now the problem here is you've got the markets like the US where the guys are struggling to sell the 5G. But now you've got where they've got decent volumes in the likes of India. But unfortunately, the margins are low. And it's not only them, we've seen earlier as well, the likes of Ericsson, which is also their rival, they also had to cut thousands of jobs. The long and short is that since we've seen the COVID easing, since we've seen the lockdown easing, most of these companies have not been doing that great compared to during the lockdown periods. And 5G equipment as it is, it has great competition as well. But yes, their biggest a concern has been the US market, even though the likes of India are doing that great.
Let's conclude the conversation with Netflix. It says it's added 8.76 million customers in the third quarter, which boosted its overall subscriber base to just over 247 million. Talk us through those numbers.
You know, almost 70% thereof of that increase is coming from Europe, Middle East, and Africa. We're talking plus minus just over 4 million. And the guys were just so fortunate that even though there was a strike, because most of their production is happening outside the US, they could still continue to survive and manage to get some of the programs online. But I think what also worked well for them, and I think they're firing in all cylinders, managed to increase prices in these tough economic conditions, mainly in the US, the likes of the UK and Europe. So that is boding well when it comes to their revenue. And the guys expect to get the very same percentage increase when it comes to subscribers in the current quarter.
Makwe Masilela is Chief Investment Officer at Makwe Fund Managers. Thank you very much for that markets update.